Today we are back in Miami Shores, walking down some different streets. I can't even remember if I've walked down this street before or not, but it is a beautiful street. Lots of big, lush trees lining this street, keeping me in the shade. Feels pretty good. I want to talk about something that I kind of suspected ever since we've seen things take a turn for the worse in the economy. Wasn't ever really sure about, but after reading more about it, I'm starting to think that this actually is happening. And what I'm talking about is American greed fueling this inflation that we have. And obviously it's not just America, but you know, there's that show American Greed, so it's kind of a cool name for the video, right? But anyhow, the theory here is, and something that I suspected for a while now, is one of the reasons that everything's getting more expensive is not just because of the supply chain issues that we've had and businesses going under and all the money printing, but there's also the greed factor as well, where companies are intentionally raising prices far above what they need to for their profit margins to basically cash in on this inflation mentality. Because basically the idea here is, okay, people are expecting prices to go up on everything, so we can get away with charging more for things because people are expecting to pay more. That's kind of the idea here. And one way that it's kind of confirmed that this is happening right now is through some of this profit data that between the end of 2020 and the third quarter of 2022, employee pay rose about 14% during that time. However, corporate profits grew by 28%, so more than double what wages grew by in the same time frame. Now, how is that possible? Because companies pay their employees more, right? And that costs them extra, but they're somehow still making double the amount in profit. Strange, right? Well, obviously not. And that's where the confirmation of this American greed is coming in, if you ask me, that these guys have been charging more for everything all along than they really need to. Right now, they're probably getting away with murder because since many of the supply chain issues have been mostly resolved, well, they're still charging more than ever because they can get away with it. And interestingly enough, I feel like one of the areas we see this happening the most is nowhere else other than the housing market. You have a lot of sellers asking ridiculous asking prices, and you have some dim-witted buyers coming in and paying those ridiculous asking prices without even giving it a second thought, because either they're uneducated and they don't know the status of the current market, that you don't need to go through crazy bidding wars and over asking price and waiving all your contingencies anymore, or because they just have FOMO and they just feel like if they don't get the house today, that they'll never ever get it. Thank God for the upcoming recession, guys, because guess what? This recession is going to bring an end to all of this greed and madness by default, because what's going to happen is as more companies start struggling and they're just not getting the sales figures and things that they need to, well, first we see that they're turning to layoffs. But once they can't lay anyone else off and they still need people to work there, what's going to come next? They're going to have to start lowering their prices to become more competitive, right? That's all there is left to do. Otherwise, you just go out of business. So there's no other option after that. So you have people screaming at the top of their lungs for the Fed to stop the interest rate hikes, and this is going to throw us into a deep recession. Awesome. Thank you so much. That's exactly what we need right now. As much as people don't want to face that or admit it, this is the best way forward, guys. The deep recession, bring it on, because I can't wait to see some sort of resemblance of normalcy of how things were pre-pandemic. And obviously, things in this country and the economy were far from perfect pre-pandemic, but I think we can all say it was a whole lot better than it is right now. And one last point on this is why I think it's more important than ever to be a budget conscious shopper with everything, guys. I'm not saying you should like downgrade the quality of the items you buy by any means, but what I'm saying is now's a great time to shop around for anything, whether you're looking to pick up a car or a house, or just trying to get the best deal on a new TV set or furniture, whatever it might be. You need to shop around because there are more deals today than there were a year ago on everything. And people that are not awake to this and are not aware of the current state of affairs, then they're the ones that are going to end up overpaying for all of this stuff. Meanwhile, people like us are out there getting the deals. And this kind of just brings me right into my next point, because there's all this talk that pretty soon the Fed is going to pivot because the bond market is flashing warning signals. We have this surge in the yields on the short-term treasuries because what's happening is you have the shares on the 1 to 3 year treasuries moving up 2 standard deviations. Apparently, since they've been keeping track, this has only ever happened 3 other times in history. And interestingly enough, 2 out of those 3 times were just within the last 15 years since the last recession. Okay, guys, so the last one was March 2020 when everything completely got flipped upside down from the pandemic. The time before that was between August 2007 and September 2008 during the great financial crisis. And prior to that was 2002 during the dot-com bust. And I think when you see things like this, it's a huge reflection of just how upside down everything is being ran ever since, the late 90s, the early 2000s. I mean, it's been 23 years since we've been into the year 2000, guys. And all 3 times that this has ever happened has been within this time frame, this 20-year span, which just goes to show you that the way they're doing things is completely unsustainable.
And wow, what a coincidence. This house for sale that we're walking by right now literally backs up the point I was just making about how everything has been completely upside down since the year 2000. The current owner bought this place in 1998 for only $36,000, and today it's a complete teardown. It says in the listing that the place needs a full renovation or it needs to be torn down and build something new, and they still want $1.1 million for it.
And so what the bond market is saying here is that every single time this has happened, at least the last 3 times, the Fed came in and quickly cut interest rates. And a lot of investors are thinking that's going to happen again soon, since all this is starting to happen again. And so all these investors are saying that they basically have a pivot priced into the market coming very soon, because this has happened every single time in history. And this must mean that the recession is very near, and it's almost a guarantee that this pivot is going to happen. Once again, guys, Jerome Powell and the Fed has come out time and time again saying that they're not going to stop and they're not going to pivot with the interest rate hikes until inflation is back to the 2% mark. And since we're still well above 6%, if you believe the CPI numbers, then that's not going to happen anytime soon. And this is the most interesting part of this to me, because you have all these investors on Wall Street basically betting against the Fed that they are going to turn around and save the day with the interest rates if the economy starts to falter and we hit the recession. I don't know, guys. I mean, so far they haven't done that, okay? And I'm not saying that we should trust everything that the Fed does or will do, but what I am saying is that so far they've stuck with their word in the sense that they haven't been lowering interest rates yet. I feel like these investors just don't realize or just don't care that if the Fed were to pivot as soon as our economy gets in trouble and, things start to go down and they turn the money printer back on and start lowering rates, that it's going to be the end of the economy, guys. It's going to be the end of the dollar. Whatever little value is left of the dollar is going to be completely evaporated by this move that the Fed would potentially do. I mean, don't they realize that the whole point of all these interest rate hikes is to basically make things crash right now? I think it's pretty safe to say, guys, that the goal or the idea or notion of a potential soft landing is a fairy tale at this point. It is not going to happen, and I'm pretty sure Jerome Powell and the Fed know this, and they have the choice to make inflation go down or destroy the dollar. That's basically the dilemma at this point. Even though they pivoted all the last 3 times that we've seen these short-term treasuries surge like this, I feel like, and this is just my opinion, that this time it's not going to happen, guys. And I feel like this time they're just going to stick with the rate hikes and let everything crash and burn. At least I hope they do that. I think it's the right thing to do. I could be wrong. That's just my opinion. It's my gut feeling on what's going to happen. Even if I am wrong and they do exactly what these investors think they're going to do, as soon as there's a sign of a recession and they turn around and reverse their policy and start cutting rates and turn the money printer back on, all that means is things have fallen off the deep end, guys, and exactly what we've been talking about has come to full fruition at that point, and it's going to be full-fledged recession. That's what that move would mean. And everyone who watches my videos needs to understand that right now. If there is a Fed pivot within the next few months, like investors think, the recession is official and things are going to go from bad to worse. You will see. Hoorah! We need this recession, okay? You know, this recession is the only thing that can turn things around. But I think they should make the recession even worse by not lowering rates and continuing to raise them, because we've seen people still going out and doing stupid things and buying things that they shouldn't be just because they have the available credit, or because, you know, they just don't care about paying a 7% mortgage interest rate on a house or whatever. I think they should have rates in the double-digit territory right now, way past what inflation is, and that would completely kill demand for everything. You want to see prices drop on stuff? That would do it in a hurry. But of course, not everyone wants to see a recession, especially people that are probably going to be heading for retirement within the next year or two, because people that have followed the traditional investment strategy of go to school, go to work, stay at this job, invest in the 401k, and retire hopefully with some 401k money and eventually some Social Security income, and that'll be enough to last me till the end. People that have followed that traditional advice are getting completely burned right now, to the point where just last year alone, in 2022, the typical value of a given 401k went down by 18% last year. And that's just the average, guys. Obviously, some people probably saw more, some people saw less. And that's just 1 year. And it's also the biggest losses that we've seen 401ks go down by since 2008. And Principal Financial Group, who manages a bunch of different 401k funds, has seen their phone ringing off the hook recently from people that have these 401k plans asking, well, what should we do? Should we move this money to cash? Should we be changing what we're invested in? Do we take the penalty and just take all of our money out? Like, people are freaking out, which rightfully so, because if you're losing that much money and you're getting close to retirement, this is a big problem for a lot of people, right? Of course, the standard advice that Principal Financial Group is giving people is to do nothing and to just keep your money invested, because even though you're seeing a lot of bad days, you don't know when the market's going to bottom, you don't know when you're going to have a big run up, and if you move your money to cash or you take your money out altogether, you could easily miss out on some of the best days of, you know, the stock market run-ups that we see. And while that is true, it's also a form of gambling, if you ask me. And I think this question becomes even more difficult to answer for people that are retiring soon, because, for example, once you retire, you're probably not going to be making any further contributions to your 401k. You want to start taking withdrawals from it soon and living off of that money, at least partially. If you're trying to live off this money and you're hoping that it's going to last until you're dead, well, the last thing you need is it losing 18 to 20% of its value per year right now. So I think this is a very scary position for soon-to-be retirees to be in, unfortunately. Let me know, guys, like, if this is you and you have a 401k and you're seeing the value drop to this magnitude and you're supposed to be retiring soon, like what are you gonna do? What is your plan? I don't have a 401k, so I can't even tell people, what they should do. But I pay attention to these things that are happening, and it's very unfortunate because a lot of people were led to believe when the 401k was introduced that this was going to be a replacement for pensions, and it's been anything but, guys. It's far from a pension, okay? Pensions are basically guaranteed forms of income for life until you're dead from your employer. And even though pensions are in trouble right now and people are getting their amount due that they're supposed to get from their pension slashed because of gross underfunding in the pension system, at least it still is some form of guaranteed income, even if it's half, okay? Obviously, that's not a great situation to be in if you get the short end of the stick and your pension gets halved, but it's better than someone who only has a 401k and Social Security to rely on. And, once the 401k starts completely dropping in value, when you want to start making withdrawals, you got nothing. You're pretty much, your only option then is to continue working forever. It could always be worse, but let everybody know what you're planning on doing if you have this predicament. Coincidentally, we just covered this whole thing with the student loans in yesterday's video about how pretty soon the bill's gonna be starting to come due again. Right away, guys, you're already starting to see stories about how people with student loans can push this back even further if they do start requiring payment again soon. And it's just getting out of hand at this point, because I realize that now's not a great time. We do have this recession here and people are struggling financially, but it's like, it's getting so old seeing all these stories about different ways people are kicking the can down the road right now. It's not even funny. This whole article that I read was about ways that you can basically postpone your payments even further after the government says you got to start paying up, because they have similar programs in place, just like the mortgage situation we had during the pandemic. So if you can prove that you're like a cost burden borrower, you can do something like a deferment or a forbearance, just like if you had a mortgage that you can't pay. And first of all, before we get into this, I would just want to say, for everybody that says, oh, everything is so great right now, well, if that were the case and there's no recession, then why are so many of these people that graduated with a degree and have student loan debt not able to pay back their student loans? Because isn't that the whole point of going to college, is making good money and having a safe and secure job where you earn enough not only to have a good life and feed your family, but you can also repay these loans? Because if things were going great, I would think that would be a cinch right now, but it turns out it's a major headache for many. So they have these programs in place, like these deferments and forbearances, where you can probably delay your payments for up to another 3 years, guys. But if you do that, it comes with penalties, just like when you have a forbearance on a property. And one thing a lot of people didn't realize that took these forbearance deals during the pandemic is that even though your payments are on hold, the amount of interest that your loan is accruing is not, guys. And that is the dirty little secret behind these forbearance type of deals that most people don't know. Just because your payments are on hold doesn't mean squat. You're still incurring interest every single month. So for example, if you have a $30,000 student loan debt, okay, and a 5% interest rate, that means that your loan balance is going up $1,500 per year, even though you don't owe any payments, okay? So at the end of the day, you're just cost burdening yourself more, making sure that your future self is going to owe even more money. And one of the things that this article says about helping people out with this, if you do decide to take one of these deals, that you should at least be making the interest payments during this time to avoid your loan balance going up. Like, yeah, no kidding. But in reality, you should be working. Where's your job that you just went to school for to get this awesome degree, right? How come you're not raking in the dough, guys? I mean, things are great, right? Now, one of my subscribers, Chris, sent me this email that he received from Charles Schwab, and this email highlights one of the big issues that's going on with this banking crisis right now, and I just have to share this with you guys. And I'm going to put up this email that he received on the screen so you guys can see what's going on with this. It says, "You may already know that Signature Bank of New York was recently closed by its primary banking regulator. I'm writing regarding your Signature Bank certificates of deposit, which is a CD account, which are held in your account noted above. Please note that to protect depositors, the FDIC entered into an agreement with Flagstar Bank of Hicksville, New York, to assume all broker deposits of Signature Bank." So basically, Flagstar Bank is taking over the CD accounts that were previously in Signature Bank. There is no known impact to your Signature Bank CDs at this time. However, the acquiring bank may lower the interest rates on the CDs or redeem the CDs ahead of their maturity dates. If the CDs are redeemed early, the cash proceeds will be credited to your account. If the interest rates on the CDs are lowered, we will notify you as soon as possible, and you will likely have the option to redeem the CDs early. Now, think about this, guys. How crazy is this? You have someone like Chris here trying to be smart with their money right now, putting their cash in a CD because even though it's not beating inflation, it's better than probably just about anything else right now. The CDs are paying practically what you'd get if you were to buy an investment property or treasuries, and you don't have any of the headaches that go along with owning real estate. So having a CD that pays 4.5%, 5% interest right now, it's not a bad idea. It's okay, buddy. That sign says the dog does bite. I'm sure he wouldn't bite me. But because this bank failure happened, and probably many more to follow as well, Chris could get completely shortchanged on his CD in the form of them either lowering the interest rate that they're agreeing to pay on the CD, which was not part of the deal when he entered into this agreement to buy the CD to begin with, and they might just, give him his money back because they just can't even afford to pay any interest on this at all anymore. So this email completely sheds a glaring light of just how serious this banking crisis is, guys. Like, if you have a CD account, it's not even guaranteed anymore, which it's supposed to be. That's kind of the whole point of having a CD, is you lock in an interest rate for whatever time frame it is, a year, 2 years, 3 years, whatever, and you're guaranteed that interest during the time you hold that CD. Well, not anymore. As we can see, the rules of the game with everything are completely changing right now. Like, whatever used to be up is now down. Whatever used to be left is now right. Like, I don't even know where people can turn anymore when it comes to, having a reliable and solid investment anymore, guys. Like, real estate is out. Good luck finding a property that gives you a solid return on investment right now that will beat a CD. Or now you got to worry about if you invest in a CD that, you're even going to get that interest and it's going to come to full maturity. And if you buy treasuries, you have this looming debt ceiling crisis with the US government and putting them at risk of defaulting on your treasury notes. Like, where is the safe investment right now, guys? This is why I think that having gold and silver is one of the best things that people can do right now, because it's one of those assets where they say there's no counterparty risk, meaning it doesn't matter what happens with the banks or, with the federal government or whatever, you're still going to have that gold and silver and it's still going to hold its value because that's considered money worldwide. It's one of the only things that's not affected by basically all these fake financial products that exist today, which completely are starting to fall apart under this environment. Do what you want with your own money, but I think it's good to have some of your money tied up into some physical assets right now that at least are guaranteed not to go down to zero, because everything else seems like there's no guarantee with any of that right now. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here. And I'll see you in the next one.